and welcome to today's session.
Yeah, please.
This meeting is being recorded.
Hello everyone, welcome to today's session. It gives me immense pleasure to extend a very warm welcome to all of you on behalf of Bhayander CP Study Circle of Vasai branch of WIRC. I hope you all are safe and in good health. So members, our today's topic is Budget 2022, Analysis of Key Proposals in Direct Taxes. For this, we have learned speakers with us, Shri Narendra Kumar ji, CCIT Mumbai, Shri Rajendra ji, advocate and retired ITAT member, and CA Rashmin Sanghvi sir. Sir, we welcome you all to our study circle. Many thanks for accepting our invitation. I'm sure our members would be benefited with knowledge shared by our speakers. First of all, I request my colleague CA Sheetal Sharma, Deputy Convenor, to formally introduce our today's speakers. Over to you, Sheetal.
Thank you, Ritu ma'am. At the outset, I thank our esteemed distinguished speakers to be here with us. Also, this gives me immense pleasure and pride to introduce our stars for today's webinar. Our speakers has great depth of experience in this field, and as they say, experience is the best teacher. To briefly introduce you, Rajendra sir, an advocate and officer of 1982 batch of Indian Revenue Service, he has worked in income tax department in various capacities. In Mumbai, he worked in the investigation wing for more than 5 years, beside working as exemption and CIT. While on the deputation to the Directorate of Enforcement as Deputy Director and later on Special Director of Western Region, he was in charge of FERA, FEMA and PMLA Act matters. He would supervise, investigate, adjudicate prosecutions and appellate work. His book, आयकर के प्रमुख अवधारणाएं, dealing with the basic concepts of income tax, bagged award from Ministry of Finance and Ministry of Home Affairs. Kudos to you, sir. Direct tax glossary is a compilation prepared by him, more than 2,000 words, defined and analyzed by Honorable High Courts and Supreme Court. Third edition of the DTG has been published by WIRC of Chartered Accountant in he regularly visits by being a faculty at WIRC, delivered lectures in Mumbai, Surat, Rajkot, Shigao on various topics, including lectures on INB code. After working as a member of Income Tax Appellate Tribunal, Mumbai for more than 6 years, he has retired from government service in the month of July 2008. Thank you, sir, for being here with us. Next star of our today webinar is Shri Narendra sir, presently CCIT, Chief Commissioner of Income Tax of Regional Faceless Assessment in Mumbai. Having experience of 3 decades, he joined IRS in 1988. Having spent almost his entire career, worked across various states and cities of India in Gujarat, Karnataka and Pune regions. On the professional front, mostly in central charges and international tax directorate, he was principal CIT at Jodhpur, Rajasthan, having tremendous knowledge and experience in the field of direct tax. Welcome, sir, and thank you for gracing this webinar. Now it's time for me to introduce our another star speaker, CA Rashmin Sanghvi, sir, practicing as chartered accountant in Mumbai since 1975. His pet subjects on interest are international taxation, FEMA, water management, and philosophy, which is very well demonstrated by his works and deeds. He was appointed by CBDT on e-commerce committee in the year 1999, wherein the issue of the concept of PE cannot be applied to e-commerce was given. OECD accepted this stand in the year 2013. Time and again in the year 2015, he was appointed on the new e-commerce committee which drafted the report to equalization levy as e-commerce. A book on digital taxation written by him and his team has been published in the year 2019 by Taxi. In his book, the author have analyzed why OECD proposals made in 2019 for digital taxation needed to be rejected. The book also gives author's proposal for digital taxation system. The book is available for us to download on Rashmin at rashminsingvi.com. He is very strong believer who believes that the view, even the proposal made in the year 2021 needed to be rejected and it is not in the interest of India or any country except USA. On the socio and philanthropy side, he has written book in Gujarati on his experience in social service since 1988. The book is titled as Dharna Prayogo, Experiments in Dharma. Some of his talks on international taxation, international economics, and philosophy are available on YouTube. Thank you, sir. I thank all of you for being here with us on our Bhayander CP's study circle, sir. Now I request Rajendra, sir, to please guide us through.
Rajendra,
Rajendra ji,
I
आप
request
muted
you
हैं.
to unmute.
Unmute.
Yes, yes.
So a warm welcome to these two distinguished speakers of the day and all the participants. What I am told that most of the members are from the younger generation. So naturally what we decided with the CCIT, Narendra Kumar ji and Sanghvi ji, we should, instead of going into the budget, let us discuss only the direct taxes, the amendments brought, and how as practitioner chartered accountants, we should update ourselves. So we will keep only on this. We will not go on that how much is expenditure on budget, on our defense and agriculture, and this we will not discuss any of those things. We'll keep it simple. What amendments have been brought in the Income Tax Act? We are not going to touch the GST also. Nothing, pure and simple income tax today. So among three, we decided the best person to talk about the 144B is the person who is heading this department in Mumbai. Today, in the commercial capital, a person is in charge of this new, whatever we say, faceless assessment. And he was gracious enough to take both the things, reduction in litigation and 144B. So that reduced my burden to a large extent. So, CC sir, we are thankful. Personally, I am, because otherwise I would have to deal with it. And as you know, Mr. Sanghvi, he is institution in himself.
Thank you, sir.
68. He said, I will deal with 68. So I said, okay, well. So, and then I said, okay, yes, because I have to say something. You have called me. I said, okay, whatever is left for me, it is for me. So in my case, it will be something like our Sardar Pav Bhaji. So Pav Bhaji hai, batata and onion and tomato and everything. So I will try to take whatever the rest is left for me, some of the sections, whatever time permits. Then there will be question and answer session, definitely. All the participants, you are free. You can go on writing your questions now, because first session will be our CC sir. So you can write the questions for him. Then Mr. Sanghvi, you can write the questions for him, and then it will be open, house will be open. Will it do? Can we go?
Yes, sir.
So then we will request our CC sir, Narendra Kumar ji, to start both the, and yes, yes, sir.
Yeah, thank you, sir, for this introduction. I think I am audible.
Yes, sir.
Am I audible?
Yes, yes.
Okay. Thank you. Then.
Yeah.
So, Rajendra sir, Sanghvi ji, and all the participants, a very good evening to you all. Being rather of older generation, I would have preferred to be face to face with everyone actually. But then because of Corona and changing technologies, so let it be like this. So I will ask for your forgiveness in advance if I'm not very good with the technology. So we may have technical places in between. I didn't know actually that I will have to steer this thing from the very beginning. I thought my role will be very limited and some formal welcome and farewell will be there anyway. So we are keeping to the Finance Act only instead of talking about the economics of the budget. And in the Finance Act also, we will concentrate only on the provisions relating to direct taxes, that is income tax. You would have all noticed that in this Finance Act, as far as income tax is concerned, the emphasis was only on simplifying the procedures, mitigating the litigation, rather than on bringing about substantial changes like tax rates or deductions or allowing new deductions, etc. So when I was asked by Rajendra sir, I told him that I will talk about the provisions proposed in the Finance Act, which have an objective of simplifying the law. Beforehand, I will also put a caveat or what to say, a clarification that most of this simplification or clarifications in the Finance Act, in the bill actually, are from the perspective of the department. Because the clarifications or simplifications which are required to favor the assessees or to remove the problems of the assessees, CBDT can issue on its own under Section 119 of the Act. So therefore, the Finance Bill mostly addresses those issues where they feel that the intention of the legislature behind the original provisions of the Act was probably misconstrued or was not interpreted in the way it was intended to be, and therefore they have brought many clarifications in this Finance Bill also. So I will start with those sections first. As far as 144B is concerned, it is more of a procedural law actually, because this scheme of faceless assessment does not take away any rights of the assessee, and it doesn't bring any new charge on the assessee also. So I will start with the individual amendments proposed in the Act. The first thing, I will start with the amendment proposed by way of a clarification or a clarificatory explanation in Section 14A, which deals with disallowance of the expenditure laid out not for the purposes of earning taxable income, or inversely we can say laid out for purposes of earning exempt income. This section is being used profusely while making assessment by our assessing officers, and there are many issues. But a major legal issue which cropped up in the last few years was whether, when the assessee does not have any exempt income in that particular year, though the activity undertaken was such that it would have resulted into exempt income only, whether in that scenario also can this section be applied. So now clause 9 of the Finance Bill makes an amendment by inserting an explanation which reads like, for the removal of doubts, it is hereby clarified that notwithstanding anything to the contrary contained in this Act. I'm sorry, I could not prepare slides or PowerPoint project, this Power Project slides for this. So if you have the bill, you can read, otherwise it reads like this only. So the important lines are, the provisions of this section shall apply and shall be deemed to have always applied in a case where the income not forming part of the total income under this Act has not accrued or arisen or has not been received during the previous year relevant to an assessment year, and the expenditure has been incurred during the said previous year in relation to such income, not forming part of the total income. Rajendra sir, Sanghvi ji, and those who have been in practice for some time will know that there were a lot of decisions. I will refer only to the case of Chairman West by Delhi High Court, and which has become final also because our SLP was rejected, Department Supreme Court, wherein it was held that if there is no exempt income, then the provisions of Section 10A probably will not be applied at all, because there must be an exempt income in the assessee's case before applying these provisions. So now, when this bill is enacted, passed by the Parliament, this explanation will be on the statute, and in such cases also provisions of section 14A will be applicable. What I see, because it is a clarificatory amendment, it should apply to all pending proceedings. So wherever the cases are open, either in appeal or before the assessing officer, this explanation would be used by the assessing officers in making disallowance in appropriate cases. So I fear that this issue may again give some litigation points as to whether the explanation will be applicable from assessment year 22, 23, 23, 24, or to all the pending proceedings. But in my opinion, settled law is that because the explanation is declaratory, clarificatory, or curative in nature and the face of it, it should apply to all the pending proceedings. The other issue arising after this amendment, pertaining to this section only, what I feel is there may be cases where the exempt income shown by the assessee in that particular assessment year will be less than the expenditure AO wants to attribute to such income, and contemplate disallowances would be more than this. So the way we go for legal, what we say, finer truth combing or nitty-gritties, this will still have to be, that whether it will apply only in the nil cases where there is no exempt income, or it will also apply to cases where exempt income is less but contemplated allowance is more. I don't think that we should go to more case laws here itself. The next amendment is in section 37, which relates to allowability of general business expenditure. Here again, the bill proposes to insert one explanation which reads like, it is hereby clarified that the expression expenditure incurred by an assessee for any purpose which is an offence or which is prohibited by law under explanation 1 shall include and shall be deemed to have always included the expenditure incurred by an assessee. So this new explanation 3 has 3 clauses. The first part says, for any purpose which is an offence under or which is prohibited by any law for the time being in force in India or outside India. I think this was very much there earlier also. Now, if you go to the next thing, it says to provide any benefit or perquisite in whatever form to person, whether or not carrying on business or exercising a profession, and acceptance of such benefit or perquisite by such person is in violation of any law. That is fine. It was there earlier also, a rule, but now the new thing will be regulation or guidelines, as the case may be, for the time being in force, governing the conduct of such person. So
Sir, your voice
not,
is breaking. Yes, yes. Now
voice is breaking. Maybe some. Now it's okay. Okay, so maybe I should keep it close to me. So this guideline and code of conduct, ethics, etc., brings to mind the cases of pharma companies where they used to allow various incentives to the medical, what we call them, medical professionals, doctors, and retailers, etc., etc. So though violation of guidelines may not be criminal offense, but now they made it very specific that even violating guideline itself will attract disallowance under section 37(3). So this is what immediately comes to my mind. Similarly, I feel in the case of contractors and construction business also, we find there are many buildings which are, many projects which violate the building rules or guidelines here and there. And of course, they are regularized later on also, but still the part remains like this. So this disallowance under this newly inserted explanation may be attracted there. The third part they have brought in is to compound an offense under any law for the time being in force. Here what I feel is, Rajendra sir will know better, that in many cases where offenses were compoundable, then assessee would pay compounding fee and the irregularity will be regularized and the view will be taken that there was no infringement of the law as such in view of the subsequent compounding. So now this explanation clarifies that compounding fee itself will be disallowed as a non-business expenditure, and by implication the original part where the infringement had taken place and which had been regularized by way of this compounding fee, etc., it will also be attracting disallowance under this section. So in a way, this explanation inserted to this section, we can say actually in a way it widens, but going by the intent of the legislature, it only clarifies that this extended broader view about this disallowance should have been taken in the very beginning, because the very reason for having such a section for disallowing the expenditure is public policy. So if any expenditure is against public policy, whether it is an offense or it is simply breach of regulations or it is only a violation of guidelines or ethical conduct, so now that will be covered. So this is it about 37(3) amendment. Next, I will come to amendment in section 40, which is again about the provision was very clear always that any expenditure on payment of income tax or corporation tax, any tax on profits of business or income of assessee will be disallowable, will not be allowed as an expenditure from that income itself. But still, we have surcharge and we have cess, different type of cess. So there was a dispute or difference of opinion whether the cess will also form in the definition of tax. By this proposed amendment in this bill, clause 13, this has been clarified that tax for the purpose of this disallowance will also include, and here again it still shall be deemed to have always included. So it means this clarification will apply to all pending proceedings as well. So tax, surcharge and cess, all the three will be disallowed now from taxable from the, if it is claimed as an expenditure, it will be disallowed. Then we have some clarificatory amendments again in section 43B, that is about where expenditure by way of interest was to be allowed on actual payment of interest, but a liberal view was being taken in some of the proceedings that conversion of that interest part, including the original loan, into any type of financial instrument like debenture, etc., will also amount to payment, and it was being allowed, and the disallowances are being knocked out. This they have cleared it, and they inserted this verse that if the loan or interest, if the interest is converted into loan or advance or even debenture or any other instrument by which the liability to pay is deferred to a future date, the disallowance under section 43B will be attractive. Then, though this is not clarificatory actually, but 79A section has again been amended. So I don't know if Sanghvi may be taking this action on such amendment in such related provisions or such assessments. Broadly, the proposed amendment says that there are any losses or carried forward depreciation, it will not be allowed to be set off against the undisclosed income detected during the course of the search under section 134, 132 or requisition under 132A. So provisions are clear. There may be a dispute as to the definition and scope of undisclosed income. Otherwise, we are going back to the concept of block assessment, where undisclosed income was being assessed totally separately, where earlier we had this 95, 96 to 2002-3 assessment years, that block income for 10 years will be, undisclosed income of the block will be taxed separately, and regular assessments will remain untouched from the undisclosed income. It will be something similar to those provisions again. And now I'll come to amendment in section 158AA. This is specifically targeted towards mitigating the litigation or reducing the number of appeals. The subject of this proposed amendment are the appeals which are filed repetitively on the same issues, where the issue which is in dispute has already been decided by a higher forum, either in the assessor's own case or in any other assessor's case. As far as assessor's own case is concerned, where an issue had been decided in favor of the assessee in some earlier assessment year in some appeal, the provisions are already there, though very rarely used. Now scope has been widened, and if the issue, like we have so many cases where issue will be common, like 40A, we discussed 14A itself, we discussed. There may be issues about allowability of some expenditure or allowability of different deductions in chapter 6, etc., where similar issues have been deliberated upon and decided by higher courts, high court, Supreme Court, or tribunal, but they keep on cropping up year after year. And the practice was we'll be filing appeals to keep the issue alive. So this provision now mandates for the department that in all such cases, first the collegium will decide whether the issue which has already been decided is identical to the issue before the collegium, and if they hold so, then they will ask the concerned jurisdictional commissioner, they will direct the concerned commissioner that they can seek assessee's concurrence, and after that they can keep, instead of filing the appeal, they can simply make a application and keep it pending. So whenever the issue is finally decided, and if it is decided against the assessee, then only appeal will be filed. Mostly it is procedural for departments in-house working. Only thing is assessee's concurrence is required before keeping appeal in abeyance like this. So my suggestion only will be you take note of this thing, enlighten your assessees also about the provisions, and if you think that issues are already there and unnecessary litigation should be avoided, this concurrence can be given in time, because the time limit still remains for deciding whether appeal is to be filed or not. And if that concurrence is not received within the time limit, maybe revenue will be compelled to go in appeal. I think that point will be taken care of. Then there is amendment in section 170 that is about succession to the business and what happens in the case of reorganization of business. So the proposed amendment in the bill clarifies that if assessment proceedings are taken up during the pendency of restructuring or reorganization proceedings of a company, because these proceeding, business reorganization, pendency, merger of companies, demerger of companies, and all these things take a lot of time before competent court. And during the pendency, assessment proceedings go on. And when finally the scheme, whatever it is, amalgamation, merger, demerger, is approved, it comes to effect from the stipulated date, which is normally when the application was filed itself. There will be a date for making it effective, and it may be earlier dates for which earlier years for which assessments have already been completed. So this section just clarifies that in such a situation, the completed assessments will be deemed to have been taken up against the successor in the business. So there is no need to make fresh assessment on the successor, and there will be no dispute about getting those assessments nullified or going into appeal on this account. Then from assessee's point of view, section 179 has been amended, And though amendment looks innocuous, but it will have significance because so far this pertains to recovery proceedings in the case of companies. The heading of the section earlier, or as it exists today, it reads like companies in liquidation. So these provisions about enforcing recovery from the directors of the private limited companies was taken recourse to only in those companies' cases which were under liquidation. Now this proposed amendment removes those words in liquidation. So it looks like it will apply to all private limited companies for recovery proceedings wherever demand is pending and assessee is in default. They have not made the payments as per the directions of the AO or the TRO or whatever the case may be, and they also don't have a stay. So I hope there will be some administrative instructions as to in what select cases these provisions are to be used. But this amendment is proposed. So it's there. Then I'll come to proposed amendment in section 263 because there is dispute. Lot many cases are going on like this, that because the TPO in transfer pricing cases, a report is taken from TPO and the assessing officer is bound to pass his order wherever in the case of eligible assessees as per the TPO's determination of the arm's length price. Now in such cases, when appeal was filed to the ITAT, issue arose, if CIT suppose later on find out that the TPO had erred or TPO's order was prejudicial to the revenue and it needed a revision, because TPO's order is not final, only the assessment order used to be revised, and the plea was taken that the assessment order is based on TPO's order and TPO's order cannot be revised by the commissioner, administrative commissioner, who was passing the 263 order. And in many cases, tribunals have held like this. That assessments which are based on TPO's order also can be revised. Then naturally, by implication, a revised TP report can be sought if directions are issued like this in 263. So what I want to point out is that all these amendments which have been proposed are basically to remove ambiguities, bring in more clarity beforehand, and reduce litigation. How far these objectives will be achieved, we will see in future. I was also asked to cover provisions of section 144B. Frankly, my reading is that 144B is basically procedure and more for department's internal consumption. Because as far as assessees are concerned, the major change is there is no face-to-face interaction. Submissions have to be made electronically. And of course, that system interface is there. So if the system interface goes into some trouble, there are glitches or something, sometimes it may create problem. Otherwise, the procedure was almost same. Instead of the assessees getting a notice physically signed by the AO, now they are getting notices signed from the REFSC. So I can speak about the structure within the department, though it doesn't actually affect the assessees. In the finance bill also, more or less, similar provisions have been repeated. The scheme, broadly speaking, remains the same. There are not many changes substantively. One, from litigation point of view, one change they have proposed is they have removed section 144B9. We said that any action, any assessment which was completed in violation or in what we can say without following this scheme to the core will stand null and void. So now this section is proposed to be removed. The idea is not to take away any rights of the assessee, because in some comments on net etc. I saw that this removal, proposed removal, is being compared as to the rights, that is assessee's right to natural justice will also be affected. I don't think it is so. The principles of natural justice always have to be followed in any judicial or quasi-judicial proceedings, whether they are completed in a physical form or an electronic form or this faceless manner also. So that will not be affected actually. And nutshell principle of natural justice also requires that nobody should be judged in his own case, which is not there in income tax proceedings at all. And second is the other party should be heard, which is there in the provisions of 144V faceless scheme, and that is very much there. The that hearing may be through video conferencing, but hearing opportunity has to be given. There is no two view about that. So this proposed removal, what it does basically is that the litigation which sometimes, because this is a new scheme and cases are still coming up, which are based on very insignificant, what we can say, non-compliance with the provisions of the scheme. Because there are so many internal things that the notice should go to. If verification is to be done, it has to go to VU, or RU says something, then it will. So for those procedural things, which actually doesn't affect assessee's rights in any way, and if those also have not been followed to the core, then at least this 144B9 is not there. So now faceless assessments will have to be challenged or what we can say tested on purely on the principles of natural justice as far as this opportunity of hearing and adequate hearing etc. are concerned, without any recourse to this section. This is all this section makes a difference. Otherwise, it is all procedural 144B. So what I think is, if there are any specific queries, or maybe I would respond to those queries, because if I just repeat that after filing of returns, the returns are picked up by that randomly by that scheme, and then notices are generated, I don't think that is required or that will help us in understanding the scheme better in any way. So that's all. Thank you very much. Thank you, Rajendra. Thank you everyone for patient hearing. I will be there to take questions if any. Thank you very much.
So after hearing our CC sir, now I would request Mr. Rashmin Sanghvi, and he is always as interesting as today he will be. I know him for a long period, and so new generation people, you should think how to fill in his shoes, the person whom you can follow. I will say he is a rather academician than a chartered accountant. Yes, he has cleared the exam, that I know, but so not taking much time, I will request Mr. Sanghvi to take over. Thank you.
Thank you, Rajendra ji, and my respects to Shri Narendra Kumar ji. I will share my thoughts on the budget. And as Rajendra ji has said, here we are not going into controversies. We are trying to explain the provisions proposed by the Finance Minister. I will go in the order of issues which have generated maximum attention. So, for example, this virtual digital assets, there has been a lot of discussion in the media and people have a lot of queries on that. So the first thing I am taking up virtual digital assets. As Finance Minister has clarified, just because income tax provisions have been introduced, it does not mean that virtual transactions automatically become legal. This is just a tax payable. And as all people who have done articleship, we study under income tax law a basic principle that any income, whether legal or illegal, is always taxable. And a classic illustration is if a robber robs somebody and earns money, even that money is taxable. What the police will do with the robber, that is a separate issue. But income tax department is entitled to levy tax on the illegal income. Now, so there is no opinion on whether cryptocurrency transactions or other transactions are legal or not. That is an issue separately to be decided. Under income tax, they will be taxable. A second clarification, that now that income tax is proposed in a particular manner on cryptocurrencies, it does not mean that until now those transactions were tax-free. They were always taxable. Meaning, if there is an Indian resident, his global income is taxable in India, period. Whether he conducts a crypto transaction in India or he has stored his cryptocurrency in a foreign wallet and he sells on a foreign exchange, he cannot say that this is my foreign income. It is always taxable. And I am emphasizing this issue because people have probably said that, oh, I am holding my cryptocurrency abroad. I had sent my money abroad under liberalized remittance scheme. So why should that be taxable? No. Section 5 of Income Tax Act is abundantly clear. Once a person is Indian resident, his global income is taxable. Whether, and in fact, I would even go one step further, whether you are doing trading in cryptocurrencies, then it will be your business income. If you are holding the cryptocurrency for 3 years and then selling it, it will be long-term capital gain. So these existing provisions of the law would certainly apply up to 31st March 22, and thereafter the finance bill proposals will take place. So with this, some fundamental clarifications, I am going to the finance bill. First of all, under section 247A, virtual digital asset has been defined. Okay, this definition is not happily worded, and it is going to create a lot of controversies and lot of litigation. I hope that even before the bill becomes Finance Act, there is some clarification about it. But as Rajendra ji has instructed, I will not go into controversies. I would rather just explain the provisions of the finance bill. So virtual digital asset has been defined. So prima facie, all those cryptocurrencies will be covered. Non-fungible tokens are being issued and people are making money out of it. So even that money is taxable. It will be covered under this particular chapter. And central government is authorized to issue by notification and cover any other asset as a digital asset. I'm just making a small remark that virtual and digital in today's time mean one and the same thing. So why there are both the words are included? It can be virtual asset, it can be digital asset. But anyway, that is the way they have provided. Now I'll come to section 115 BBH. This section requires a little more clarification. So I will cover that section in little more details. So first of all, it provides that income arising from these virtual digital assets will be taxed at the rate of 30%. So there is a flat rate of 30%. There are no slab systems, and there is no distinction between capital gain and a revenue income. Once you earn out of virtual digital assets, the income is taxable at the rate of 30%. And on that 30%, surcharge also will be leviable. So the tax rate will come to the maximum marginal rate. And for virtual income, so income arising out of virtual digital asset, if we can call it as virtual income, for that income, no expenses are allowable except the cost of acquisition of the asset. So let us say somebody acquired a virtual asset for $100. He sold it for $105, but in the process, he has incurred several other expenses. Then $100 being the cost of acquisition will be allowed as a deduction. No other expenses will be allowed, and the $5 will be taxable at the rate of 30%. One should always note that there are FEMA provisions involved. And when an Indian resident from India tries to acquire a foreign Bitcoin, he cannot just make a payment like that, because we Indian residents are prima facie not permitted to deal in foreign exchange. Only under the liberalized remittance scheme, a person can remit money abroad, and to the extent of $2.5 lakh per year, he can acquire foreign currency or he can acquire any foreign assets that is permitted under FEMA. So people should not go beyond the limit of LRS and should not try to make remittance from India outside the LRS limit. Some people have said that they will make payment through credit card, and that credit card payment escapes the regulatory note or regulatory restriction. But the point is, an Indian resident purchasing foreign assets outside the limits of liberalized remittance scheme is violating FEMA. So income tax becomes secondary issue. Primary issue will be under FEMA. He will be booked, and there will be necessary proceedings against him. So before acquiring virtual assets outside India, one has to ensure that he is complying with FEMA. Let us say he has complied with FEMA, then if he just holds on to the asset, there is no tax. But on transfer, whatever income he earns, he will be liable to pay 30% tax. No expenses allowed, and losses incurred under other heads of income will not be allowed to be set off against virtual income. Losses incurred on virtual income will not be allowed to be set off against other incomes. This is very natural provision, because to book a loss on a virtual asset is very easy. If somebody has made a very big business profit, he will claim that I have made loss under virtual transactions, and please allow me the set off against my normal business income. Now that used to happen against speculative incomes also, and under the Income Tax Act, it is very clearly provided that speculative losses cannot be set off against other business income. So there is a similar provision here. One thing, again, I'm going beyond finance bill and I'm saying my personal view, all cryptocurrencies have no intrinsic value. Why people are buying that is simple, that they feel that whether I am buying is logical or not, I will be able to sell off to somebody else who is also not interested about logic. I, for one, would never buy a cryptocurrency, and I would never advise anybody to buy such cryptocurrency, because there is no underlying promise by anybody under any cryptocurrency. It has no intrinsic value. Just because somebody else is ready to buy at a higher price, I also buy, that kind of theory can cause substantial losses to a person who wants to make this kind of transaction. Now Reserve Bank has been clarified, Reserve Bank will come out with a cryptocurrency. That of course will be a legal tender, but since Indian Central Bank Digital Currency, as they say, CBDC, okay, will be pegged with Indian rupee, so there will be no speculative interest in it. So Reserve Bank, when it comes out with digital currency, people will buy and hold on to digital currency only for the convenience in the transaction, but there will be no speculative interest in it. One small thing I will just mention here is that, really speaking, there was no need for a separate chapter, say section 115 BBH, and a separate system of taxation. What the finance bill should have done was just say that a cryptocurrency or NFT, etc., are properties, then they will be taxable just like any other property. If you are doing trading in it, it will be business income. If you are holding on and then selling, then this will be a capital gain. More than that, there was no need for any further provision. But anyway, they have made this provision. So that is about, of course, on virtual digital assets. Again, the person who makes payment has to deduct income tax at source, 1% income tax. The problem is that when you sell it on an exchange, the buyer and the seller do not meet. Exchange is a clearing house, but the seller doesn't know who is the buyer, buyer doesn't know who is the seller. So, okay. So it is very difficult. Is my voice okay now?
Yes.
Okay.
Yes.
Okay. Yeah. So it is very difficult for administering this provision of tax collection at source or tax deduction at source of 1%. There are practical difficulties. Somehow government will have to come out with a procedure for deduction of tax. Okay. Now I will move to section 68. Section 68 is, originally people used to do, I mean, I remember 30 years back, 40 years back, people would just make a business of providing entry. When somebody doesn't have white income, he somehow files income tax return and shows savings, and then he gives entry to somebody who wants to convert his black money into white. So income tax officers were disallowing such loans taken, and they were adding it to the income. Then the issue was, supposing Mr. Patel has taken a loan from Mr. Shah. Okay. Now Patel has to prove the identity of Mr. Shah, and then the income tax officer has to consider that loan as a proper loan, and it could not be made as an addition to income under section 68. But there were cases where certain agents, they would file 500 returns of people living in slums. Those 500 people will disclose an income of 2,60,000, so a savings of 2 lakhs, and that money will be accumulated in their bank accounts, and then they will give loan to Mr. Patel. Now, if you ask Mr. Shah, so Mr. Patel has filed his income tax return, he will provide the permanent account number of Mr. Shah. But Mr. Shah will not be able to prove his source of income, etc. And then the courts have held that in making assessment of Mr. Patel's income, you can ask his source. Now you cannot ask about the source of source. So you cannot force Mr. Shah, the apparent lender, to prove from where he has got his income. He may be working as a driver, he may be working as a Zaduwala or something, and apparently he has no capability to give such loans, but still the income tax officer was not entitled to ask the lender to prove his capability to give loan. So now the Act has made an amendment and increased the burden of proof, the onus of proving the loan to be genuine, and you have to prove the lender's capability also. I always advise my clients that in case you are taking a loan from anybody, you have to be able to prove the identity of the lender, his capability to give you a loan, and the fact that he has given you a loan through banking entries. And now you have to add the fourth factor, that the lender should always be ready and willing to provide his own details to your income tax officer to prove his capability, etc. So one has to be very careful about it. Another important section is section 50. In section 50, now they have made an amendment, but this is essentially a procedural amendment or a rather technical amendment. And many people have found it difficult to understand why this provision has come. So for that purpose, I am giving an illustration here. We all understand that section 50 is for block of assets. If the SSC has a block of assets, then whatever assets he purchases will be added to the block. Whatever is sold will be deducted from the block. And as long as there is even a single rupee value in the block, he doesn't pay any tax. Only when his block gets extinguished and the sale proceeds of the assets go beyond the written down value of the block of assets, that he has to pay income tax on that surplus. Now, to explain this little complex provision where there is a interaction of section 32, section 43, and section 50, I'm giving this illustration. I actually recognize that Mr. Gautam Nayak, senior chartered accountant, Mr. Gautam Nayak, he had discussed with me and he explained me these provisions. Otherwise, I was also finding it difficult to understand. So what Gautam has explained, I'm telling you. Say the SSC had purchased some years back a brand name. So it is intangible property. He purchased it for 1 crore of rupees. Over the years, after providing for depreciation, the written down value is reduced to 5 lakhs of rupees. Now he has got an opportunity. He can sell that brand name for 2 crores of rupees. Now, if he sells it for 2 crores of rupees, there will be a gain of 195 lakhs, 1.95 crore, on which he will have to pay income tax as if it is a short-term capital gain. So before sale of the brand name, the SSC purchases a goodwill of 3 crores of rupees. Now he knows that due to earlier amendments, no depreciation will be provided on goodwill, but the goodwill is there in the block of assets. So his written down value of 5 lakhs will be increased by 3 crores and the block of assets will be worth 3 crores and 5 lakhs. Having done this, he sells the brand. He sells the brand for 2 crores. So his block of 3 crore 5 lakhs will be reduced to 1 crore 5 lakhs. And since there is a value in the block of assets, he will not be liable to pay any tax at all. So section 50 provisions will be frustrated. He will escape taxation. So last year amendments were carried out saying that on goodwill, no depreciation will be available. But the definition of block of assets is such that unless and until an asset is sold, it doesn't get out of the block of assets. And if it does not get out of the block of assets, it stays in the block. Whether you provide depreciation or not, it is part of the block and the SSC escapes income tax under section 50. That is why this year, the finance bill proposes an amendment that goodwill shall be presumed to have been transferred. Since it is presumed to have been transferred, it will get out of the block of assets. The written down value of the block of assets will get reduced. In this illustration, it will get reduced to 5 lakhs, which is the WDV of the brand. And if the brand is sold for anything more than 5 lakhs of rupees, the SSC will have to pay tax as if it is a short-term capital gain. So this is on section 50. I have covered virtual asset. Now I have to cover section 37. Disallowance of expenses. Just a moment, I'll take out the provision. Yes. Actually, Narendra Kumar ji has already covered it briefly, so I'll just touch upon it briefly. That expenses incurred which are contrary to public policy will be disallowed. If they are prohibited under a law, that is fine. But the pharmaceutical companies have a practice of giving generous gifts to doctors so that the doctors prescribe medicines of that particular brand. And let us say there is a general medicine available in generic category, which is costing only 5 rupees. And there is a branded medicine which is available for 30 rupees. Then doctor will prescribe the branded medicine. And the poor patient, he will go by doctor's advice. And why is doctor doing that? Because the pharma company is giving him gift worth lakhs of rupees, making his foreign travel, giving him free of charge, family foreign travel also permitted, and things like that. These are certainly policies contrary to public policy. Now, Medical Association has provided that pharma companies will not give gift to doctors. but that is not a law. That is a professional code of conduct. Now, the finance bill says, even if you are violating the professional code of conduct, that expenditure will not be available as deduction. So if a pharmaceutical company gives gifts to doctors, which are otherwise under the code of conduct not permitted, still he goes ahead and violates the code of conduct, then the law says you will not get deduction against your taxable income. Then the last provision which I will cover right now is an amendment in section 56. Digital assets or virtual digital assets have been included in the definition of property, because section 56 is for a specific purpose. Certain properties gifted or transferred at a consideration less than the market value. In such cases, the difference becomes taxable in the hands of the recipient of the asset. Of course, there are exemptions for gift from charitable trust, gift from close relatives, etc. But ignoring those things, if there are transactions between two strangers, then such a transaction becomes taxable. Now, supposing somebody gives you a gift of Bitcoin, that was not a property included under section 56(2). So somebody could gift you a Bitcoin, which is worth say $50,000, and it would escape section 56 tax. So now it has been included under section 56 and it becomes subject to taxation under section 56. Section 50 amendment, yes. Sir, I think I have covered all my topics. I will stop here. I'll be available here. If there is any query, I'll be glad to answer. So Rajendra ji, you can please take over.
Thank you. So now this time constraint, as you know, both these speakers are available. We will keep this our house open once whatever time is left with us, and you can have queries. There is no issues. What I find is our participants number had not touched 3 digits, because at 5:45 it was 99. Then it is going down. Now it is roughly 94. Whatever it is, because you have to earn CP hours. So yes, there is no other way to stay. But otherwise, whoever want to leave, yes, you can leave. There is nothing. You can join later on with some other group whenever there is lecture. Yes, now this Sheetal D. Sharma, Ritu Agarwal and Mr. Amit Agarwal, I think they are the organizers. Yes. So what I'm supposed to do, let me tell you, because once a trainer, always a trainer, they say in our department. Because I had been in NADT Nagpur, I trained 2 batches of IRS probationers. So I take all the chartered accountants who are new as my probationers. And my system of training is not, okay, once I go on speaking, I will speak. No, it has to be interactive. So if they do not, any of your participants do not speak, then it becomes very difficult for me to go forward. So somewhere somebody has to speak. So this is what I want from you. Yes, Mother, at least Mr. Madan Vaishnav, or yes, he has come, that is good. Or some other may come, I will like them, I welcome them. So what we can do is, I have this slide, and I think with share screen, it can go. Let me try share screen, if I can.
Yes, sir, you can in the.
Okay. Here.
Yes.
PowerPoint here. So, yes. Yeah. This one. First, go to first page. First उसके भी ऊपर. Yes. So technically ये थोड़ा हाथ तंग है. Yes, so my colleague, he is helping me. So what I have done is, and I will share with you, that there are about 82 sections where there is amendment or there is insertion or there is clarification. So I have given in the next slides total 82 changes, amendments 69, insertion 12, and substitution only 1, 285. So the youngsters, I will tell you one thing. There is an insertion that is in green. I have mentioned that. Try to understand why this has been inserted. See, this is how we train our officers. Because in NADT, we get the officers from engineering and then humanities, means literature people, or they may be some veterinary doctor also. We have got. And within a 16 months, we have to turn them in assistant commissioner posted in the field, try to understand our, and we train them. So what we tell them, so I am saying you the same thing. Okay, how to understand the income tax, how to read it. So this amendment, why this amendment has been brought, one thing. And secondly, what was the law earlier? Unless and until you know what was there, then you will understand why this amendment has been brought in particular year. Because in litigation, when you go for the CIT appeal or tribunal, what you have to seek in this year, in particular year, what was the section? When this amendment came in, accordingly, you can lose or win your case. So from an advocate angle, I am telling one thing, take care of it. When this amendment was brought and why it was brought. Why is the main thing? Both of my learned friends, they had told you about 37. Do you know why it was brought? Because if you go in the memo, they had given a very long elaboration. Okay, what happened, which case came and then and this. And actually, if you remember, this 31(7) first explanation when came, why it came, do you know? Anybody, participants? When did this 37, one explanation was introduced? Nobody? है किसी के पास एक्ट? Just go and see the footnotes. कौन से साल में आया था? कोई नहीं बताते. संघवी साहब देखिए वो उनका उठा रहे हैं. Your senior person is now saving you. Juniors, it is not done. Anyway, so this section came because there was a history of behind this. You know, in 80s and 90s in Mumbai, these bylog used to charge money from everybody. Hafta. And somebody, special one, this what I call our builder, in his case, when search was carried out, a diary was found and there was hafta. He mentioned it and he claimed this expenditure and tribunal allowed it as business expenditure. Yes, tribunal allowed, let me tell you. So next year this amendment was brought and 37, one explanation was brought. Okay, you cannot, this kind of payment cannot be treated as business expenditure. So this was the history. Now this was going on, this medical and this thing. So they have clarified. So this amendment, whenever it is brought, try to understand why this was brought. So explanatory notes in the memo comes, read them carefully. The CAs means up to 5 years, I am told, and FCAs up to 10, 12 years. For you, it is very important to understand the thing. So this is all the section. Next 7 pages are about in which section amendment has been brought or insertion is there. So insertion generally will be for clarifying the things. It will be like this. And substitution, there must be some reason. So I am leaving this 6-7 pages. Like in this 79A, there is insertion. Leave. This is only for your academics if you want to do. Yes. Now one thing is I will tell you, very useful for you. Till I was in the department, I never bothered about it. After joining this High Court, yes, there is something, because there is an increase in surcharge. So while you are filing your returns or advising your clients, take care of this surcharge. And now this TDS 31 subsections surcharge they are talking of. Please take care of it. One is section 192, one is 193, 33, 194, one of 95, and 4 of 196. So if your SS is covered by all one of these subsections, be careful about surcharge. Then on TCS as well as TDS, they have said that surcharge will be there. And various section of 115. So dear friends, especially youngsters, this is for you to be careful. That's why I have brought this, that this is the change. Yes, then we can go for some provisions, some sections, section 11, 12A, 12AB, there are changes because these sections go on changing. One side is the department and other side is your fraternity, and litigation is going on about trusts. So especially about registration, I don't know why there should be so much litigation, but it is there. So 12AB, they have brought something, and section 11, they have brought explanation 3. This is a new thing. And why I'm taking this trust, because I have worked as DI here, exemptions, and I know something, there is a problem, because in Mumbai, let me tell you, most of the trust, I don't say vouch for every, most of the trusts are genuine, private trust, and doing very good job. Some, yes, they may be, there are human tendency. So at that time, every 3 years, that registration was to be renewed, and ATG was to be renewed. So yes. So now this explanation 3 has come. What does it say? कोई भी participant इसको पढ़ सकता है क्या? Can any participant read this explanation 3?
Yes, sir.
So,
Please,
am I audible?
please read it.
Am I audible, sir?
Yes, you are audible.
Section 11, explanation 3A.
Yeah, yes.
For the purposes of this subsection, where the
Yes.
property held under a trust or institution includes any temple, mosque, gurdwara, church, or other place notified under clause B of subsection 2 of section 80G,
Yes.
any sum received by such trust or institution as voluntary contribution for the purpose of renovation or repair of such temple, mosque, gurdwara, church, or other place may, at its option, be treated by such trust or institution as forming part of the corpus of the trust or the institution, subject to the condition that the trust or the institution.
Thank you, Nikunj. We will go on the trust. Thank you, Nikunj. Now, if I ask somebody, if you have to explain to one of your client who does not know all these jargons, how will you explain this section? Okay, what new thing has come? Okay, religious places, they are to be renovated or repaired. If, and for that purpose, some money is, some donation is received, yes, then it will go as a part of the corpus of the trust or the institutions. That is simple. So what I find something is it is not about construction. It is renovation or repair. If you are advising your clients, take care of this thing. Then some, they have given A, B, C, D conditions are there. Okay, what preconditions are there if it has to be done? Yes, Nikunj, can you please next? What does it say?
So I need to change the slide.
Yeah.
Yes. section 11, the conditions. A, applies such corpus only for the purpose for which the voluntary contribution was made.
Yes.
B, does not apply such corpus for making contribution or donation to any person.
Yes, you cannot further give it money. Yes.
C, maintains such corpus as separately identifiable.
Yes.
And B, invests or deposits such corpus in the forms and modes specified under subsection 5 of section 11.
Section 11. So they are very clear that this corpus you cannot give to somebody else. Secondly, it has to be separately, or if you cannot use, then it has to be invested as per subsection 11 is 11.5. They are very clear. So then again there is section explanation 3B.
Yes, sir.
Yeah.
Should I read, sir?
Yes. So they say if there is violation, what will happen? So I will suggest you, whoever you are giving some suggestion about this, some explanation has come, be clear. It is about renovation and whatever it is, and a particular thing has to be, particular system has to be followed. You have to be very careful, right? Yes. Then we go section 12A. Somebody else can volunteer. Somebody else, some participant can volunteer for this subsection. 12A. Miss Ritu Agarwal, can you request or can you come? ऐसे नहीं होता भाई, मेरे से पढ़ाया नहीं जाता है.
Sir, I can come, but I really wanted कि कोई member volunteer करता.
तो उनको कहिए ना,
तो
फिर
मैं तो कर ही
सब लोग.
मैडम आप कंडीशन डाल दीजिए, जिसने पार्टिसिपेट किया उसको CPR देंगे हम.
That is good suggestion.
Members, I request to please raise your hand if anybody wanted to, so that I can unmute. Sir, everybody's sleeping.
SJ raised hand. Great, SJ. Two participants raised hand.
Hello.
Yes.
Yeah.
Yes, sir. This is Kishore Mehta.
Please.
Sir, section 12A in subsection 1 for subclause B,
Yes.
the following clause shall be substituted with effect from 1st April 2023, namely B, where the total income of the trust or institution as computed under this act without giving effect to the provisions of section 11 and 12 exceeds the maximum amount not chargeable to tax in any previous year.
Wait, Kishore. Now, you please make me understand what does it say. I come to your office as a layman. So what you will say? Without giving effect to the provisions of section 11 and 12. What does it mean?
Without giving effect.
Yes. To the provisions of section 11 and 12 exceeds the maximum amount. Because here is the crux, everything. There was clause B in subsection 1, all right? But from 1st April, it is from next year. This will be applicable from next year. Because in section 11, we get so many exemptions. So that income, so you have not to take into consideration those parts. You have not to take, and then what will happen is next. You have to books of accounts, other documents have been kept and maintained in such form and manner and as may prescribe. And next is below section 2, section 288. 288 is about you people. Audit in prescribed form digitally. So without taking the recourse of section 11 and 12, if it crosses the limit of maximum amount, what is taxable, then you have to do all these things. So participants who are dealing with the trust, you have to be now careful from 1st April 2023. This is about now coming to section 12AB.
Sorry to interrupt, but that
Station.
Sorry, sir.
Yes.
That means assessment year 23-24 onwards, this will be applicable, right?
Yes, because it is that what it says. Yes, section 12AB. अरे भाई कोई तो अपने आइए, 2 लोगों ने हाथ खड़े किए थे, कोई आदमी तो आगे आओ।
सर आप ही नोटिस निकालो आप कोई।
Sir, I'll
Yes, sir,
check.
yes, sir. Myself, Sandeep Jain. I'll read it out. I'll read it out, sir. I'll read it out. Section
Yes,
12AB. Section 12AB.
Yes.
For subsection amendment of 4 and 5, the following the subsection shall be substituted. Namely,
Substituted. Now there is clear cut substitute. What will force? Yes.
yeah, where registration or provisional registration of a trust or an
Yes.
institution has been
Correct.
granted under clause A or clause B or clause C of subsection 1 or clause
Yes.
B of subsection 1 of section 12AA, as the
Yes.
case may be. And
Yes, so
subsequently.
registration has happened. Now section 4 will read like this. Registration has taken place. Then
Section
Yes.
12AB, clause
Yes.
A, the principal commissioner or commissioner has noticed occurrence of one or more specified violation during any previous year.
Yes.
Or clause B,
Yes.
the principal commissioner or commissioner has received a reference from the assessing officer under the second proviso to subsection 3 of section 143 or for any previous or for previous year. And clause C says such
Yes.
case has been selected in accordance with the risk management strategy formulated by the board from time to
Yes.
time for any previous year. The principal commissioner or commissioner shall.
Please stop.
Yeah.
So now there are 3 eventualities.
Yeah.
Department means PC or commissioners, principal CIT, they one or more specified violation. They have given the definition of specific violation. Second thing, there is a reference. Or third thing, risk management department. So from these 3 things happen, then what he can do? Yes, please go ahead. He shall. Please read it.
Salim bhai?
Yeah.
Yeah, it got muted. Okay, so
Yes.
one says call for such documents or
Mhm.
information from the trust or institution, or make
Yes.
such inquiry as he think necessary in order to satisfy himself about the occurrence or otherwise of any specified violation.
Correct.
2, pass an order
Yes.
in writing cancelling the registration of such trust or institution after affording a reasonable opportunity of being heard for such previous year
Yes.
and all subsequent previous years. If he is satisfied that one or more specified violation have taken place,
Yes.
then in third says pass an order in writing refusing to cancel the registration of such trust or institution if he is not satisfied about the occurrence of one or more specified violation.
Correct. And
4,
yes.
forward a copy of the order under clause 2 or clause 3
Yes.
as the case may be to the assessing officer and such trust or institution.
Correct.
For the purpose of this, the expression says, for the purpose of this subsection, the following shall mean specified violation.
Please
A.
stop.
Yeah.
Please stop. So now you understood that this will be procedure about the cancellation of registration. So this procedure he has to follow. Principle of natural justice he has to follow. He has to give you chance to appear before him, and he has to pass a speaking order. And if he finds that there is no violation of this specific violation, then yes, he may refuse. Okay, whatever the assessing officer sent him the reference. So this will be now the procedure for the cancellation. And you suggest your clients not to do this ABCD. Means start with A, then B, then C, then D, and any activity up to this. So not to do all these things. The problem is the time, because we have to spare some for your questions, queries. So we will go roughly, very quickly, whatever is left. Then section 13, this 10 after subsection 9 before explanation following subsection It is important. Whoever is practicing in this side, for them, please go through it. It is very late, but yes, we have to do. There is an again explanation. And last I am showing as subsection 11. They say no deduction in respect of any expenditure to be allowance or set off any loss shall be allowed to the assessee under any other provision of this act. So be very careful about this subsection 11. This has been already discussed. We don't want to do. We have already 56. As you know, in 10 there are so many exceptions where this will not be covered. It will not be treated as gift. This is about the corona period. Unfortunately, if any of your client has suffered and there was some casualty, this section will be useful because they have said that this will be not taxable and it is from financial year 1924, means from whenever the corona came. So even if the money is 50,000 or more, because it will not be treated as tax or whatever perk or anything, if it is received by, so please see the all these conditions and you can claim exemptions under section 56 to 10. It is a very long thing, but yes, and I pray that none of your clients should have to go through this. But yes, this is now section 79. Our CC sir had discussed about this. See to it, section 139. In section 139, they have now brought 8A. It is about updated returns. You be careful about it. When you can file and what cannot be filed, that is more important. What cannot be filed is more important. That is here. A, B, C, D. There are given so many things, A, B, C, D. Time does not permit, so we cannot, but it is important for you people. Again, let me tell you, it is very important before you go for this. Then there are certain other cases, other sections were there, but I took only these because I knew how much time is left. We can have bigger sessions on this particular section, about 68. I think we can have 139.8a, we can have a different whole section. Section 79 we can have. These are the three. It is up to you, your study circle, and if as per your RE, this WRIC, whatever is done, it can be done in your friend circle. You can form a group of your friends who are interested in that. And secondly, we can have our discussion in Hindi and in Gujarati and in Rajasthani. It is all possible, I can tell you. Yes, it can be done. It is possible. So informally we can do. Whenever you want, you can have a group of some 10, 15, 20, whoever wants to join it. And any language should not be barrier. Basic thing is you and we are there as professionals to help the clients as well as government of India. So we are, we can say, a bridge between the subject and sovereign. So we have to, yes, act like that. With this, I will now, yes, take leave from this side, but now it is an open house. Whoever wants to ask any question, definitely please raise your hand and ask the question. And we all three are there. If we can satisfy you today, we will try to. If we cannot, definitely we will send to your this institution whatever tomorrow, whatever questions are there. So the organizers, please take over, and now I think we will be ready for the question. अरे भाई इन्हों बाहर निकल जाओ.
Members may post their queries to the chat box, please. Or may raise their hands, so we can unmute. ISJ raise hand. Please unmute.
Sir, I wanted to ask a question regarding this disallowances of cess and the duty. Now they have clarified that now onwards, yeah, retrospectively they give the effect that from 2015 to 2005, that cess and duty will not be allowed as expenses from as a business expenses from your profit and loss account. Can you put some light on that, sir? Hello.
Sir, I guess your mic is on mute mode, sir. Yes, sir. Now you are unmuted, sir.
Mr. Sanghvi, please unmute yourself and yes, throw some light and guide these youngsters. And let me tell you one thing, very good thing. Mr. R.C. Sharma, ex-member of ITAT, who himself is a chartered accountant and a knowledgeable person who could not join us today because of his ill health. He has joined us there. And sir, if you are listening to us, can you please explain this thing? एक यंग बच्चे ने, आपके समाज के बच्चे ने, आपके चार्टर्ड अकाउंटेंट कम्युनिटी से एक बच्चे ने सवाल किया, प्लीज इफ यू कैन.
I guess Ramesh sir is not there.
अच्छा, तो yes, Mr. Sanghvi is there.
Sorry, I thought that the query is directed towards you, so I did not listen to it properly. But sorry, if you can repeat the query, I will try to answer.
So, Sandeep bhai karenge.
Yeah. So the query was regarding this cess and duty not deductible effective from 1st April 2000. They made this section retrospectively from 2005.
Yes.
So need some clarity on that. Why it is done in this way? Why it is required accordingly?
Yeah, I will tell you. See,
yeah.
It is always understood that Indian income tax is not deductible as an expenditure while computing taxable income in India. This is a policy decision right from the beginning. Now, because of some adjustments earlier, there was surcharge, and the law said that surcharge is also income tax and that is not deductible. Now, then they introduced something like cess. Now, cess is probably not income tax. It is a cess in addition to income tax. So, okay, the government's intention was always there that even cess is not deductible. But then there was some judicial decision which said, no, cess is not income tax. So cess is available as a deduction. So this is something going probably contrary to parliamentary intention. And hence government has made amendment with retrospective effect since the period when the cess was introduced. So right from the beginning, cess will not be available as a deduction. So if there is any case pending in appeal or otherwise open, that also will be rectified and cess will be disallowed. And actually, let me submit here one thing to our fraternity, Chartered Accountants fraternity, that if we keep asking for reliefs contrary to the parliamentary intention, then we are inviting retrospective amendments. And today the policy we must understand clearly that judicial decisions which are contrary to parliamentary intention, which effectively means government intention, will not help you. You go in appeal, you spend huge amount after lawyers' fees and all that, and then a government will ultimately amend the law with retrospective effect. So what is the benefit? It is better to comply with the law as we understand to be the government's intention. In fact, in this finance bill, there are many other amendments which have been proposed because people have gone on litigating unnecessarily. Actually, responsibility is also lying on the profession not to advise this kind of petty litigation. I hope I have clarified.
Yes. See this cess in Hindi, it is called upkar. Water cess, education cess, or there may be electric cess. So some of the authorities, judicial authorities, they held that yes, it should be allowed. But as he told, we should go to the spirit of law, what the law wants from us. Youngsters, you try to understand the law, not to this evasion or to get some small window to get out of this clutches of income tax. It is not advisable. You are young people. Why to do that? Understand, right? What is the intention? Intention of law is A, B, C, D. Go according to it. Because in 2000, whichever year it is brought, they say from this year it will be applicable. You remember section 37, this explanation one we were talking of. They said that it will be applicable from 61 when this act was brought. It came after that tribunal judgment. So this 2005, what they are saying is because cess was brought on that particular year. So it is something like clarificatory. They are making it clear, not today. In the earlier is also, it was not an expenditure allowable under section 37 because it was not wholly and exclusively spent or laid down for the carrying out of the business, profession or trade or whatever it is. Sandeep, I think, are we clear?
Yes, it is clear, but the point is pinch here is that they make it as a retrospectively. So see, people relied on the decision of the court and they then claim the expenses accordingly in the last 2, 3, 4 years. Now they have to face all these things.
Mr. Jain, whether this judgment was of the Honorable Supreme Court?
I need to check which court it is.
No, it was not. It was not. So until and unless this case gets final from the finality, you are taking a risk.
Okay.
So
got it, sir.
It can go.
Okay.
Any other question?
Thank you so much.
Yes,
Yeah,
sir.
thank you.
Rajendra Kumarji and Narendra Kumarji, I have presented a query, please. I will repeat the query. Sir, the law provides that even illegal income is taxable.
Yes.
Taxing the income, we don't distinguish whether it is legal or illegal. But while allowing deduction of expenditures, the law says that illegal expenditure will not be allowed. Sir, I had seen many years back Kishore Kumar's film Chalti Ka Naam Gaadi.
Yes.
Kishore Kumar says, Chat mai jeeta pattu aara. So both ways SSC is the loser.
Yes. See, let me tell you, Mr. Sanghvi, what I will say. It is the sovereign. It is the sovereign, and sovereign, once we say, state can say, do anything. Now, nobody is above the parliament. If parliament decides that this has to be like this, it will be like this. The only answer is like this, and court will not go beyond. You say is logic. But logic and law always do not go hand in hand. My submission will be like this only. Yeah. We will sit together. Let these bacha log ask their questions and we can. Yes. Anybody else?
Can I come in?
Yes. Why not, sir?
Can I come in?
Yes.
No, I saw Mr. Sanghvi's message. It says it is not fair. So it is not fair to whom? It is not fair to the person who is violating the law. But to the society, it is very fair actually that a person who makes money by illegal means, why should not that money be taken away from him? So again, our concept of fairness, we have to see with respect to larger society and good of the society at large, not from a technical angle of that particular person. And then otherwise you have still those cases in the Pyara Singh's case and all those laws hold good actually. So, but I don't think there are cases where
we can have discussion separately.
And claiming...
We will have one day discussion separately. बच्चा लोग, this is for you. हम लोगों का तो ये चलती रहेगी, बौद्धिक ये है जो बुद्धि विलास चलता रहेगा. Yes, youngsters, somebody.
Sir, we have a query from one member.
Ask him to come on screen.
Sir, I don't know actually. May I know?
Why? Let him raise the hand.
Rahul, I don't know whether he is in a meeting. Rahul Seksari or Rahul Sarita?
If the gentleman is not there, why should we bother about it? He's
That's true.
serious about the things. Let somebody else. And one query should come from Matra Shakti. I think about 20 ladies accountants are there, if I am not wrong. Why not a single question is coming from them?
My camera has got some technical error, I guess.
Any question? If there is no question, then we will have to close this before time. And this is very bad. Study circle, either you call the people who are different type people and who can do, if you call us, Mr. Sanghvi or Narendra Kumarji or me, it is going to be a classroom. So next time be careful. Okay, whom should you call?
Sir, I make a request. If there are no queries, I will like to take up one or two sections.
Please carry on. Carry on.
So
Please carry on.
Under section 115 BBD, and so this is a section which has a history and there is a logic behind it. 115 BBD was introduced at some year, I don't remember, but dividend received from abroad in the hands of a company was taxable at a concessional rate of 15%. The normal rate would be, let us say, 30%. Here it was reduced to 15%. So there must be a logic that you want to give relief for dividend earned from abroad, because that company would have suffered corporate tax as well as dividend tax in the country of residence, the company, foreign company declaring dividend. Now, some people took it as a license to convert black money into white at a low cost. And that has probably, though finance bill doesn't specify the reason why this provision has been withdrawn, I will tell you how the abuse was taking place. You open a company in Dubai. In Dubai, there are no rules, regulations. You do what you want. So people would show speculative income or any income, which is very easy to show there. You say you earn 10 crores of rupees, meaning your Dubai company has earned 10 crores of rupees in Dubai. Until now, there was no income tax. So that company declares a dividend of 10 crores. The Indian shareholder company gets dividend of 10 crores and pays a tax of only 15% in India. Again, if it is declaring dividend, even that 15% will become zero. So you get 10 crores of rupees from Dubai as tax-free money. Okay, this was a open khulja simsam kind of thing to convert black money into white. And it is right that government has withdrawn this section. There should be no such section in the law. Why should you permit people to convert black money into white? This is one provision I thought I will share with you.
This is great. You may take one or two more sections.
Yes,
if you want.
We have got about 15 minutes time. I will just go through my copy of the bill and yeah, there is a amendment in section 10. We have got the gift city, okay, which is International Financial Center. Now, to make it even more attractive, in this finance bill, they have proposed many more reliefs. For those of you who understand IFSC, Government of India's objective is, and I'm giving you the background to understand this section, when American company or European company wants to invest in India, okay, and let us say Hindustan Lever, Colgate, such large multinational corporations, they have their regional headquarters. Now for Asia, which would cover India and a lot of other countries, they would keep the headquarters in Singapore. Why? Because in Singapore, there is no FEMA, the income tax is low, and otherwise the government doesn't bother you. So these MNCs had made a request to Prime Minister's office that you please permit us to open our regional headquarters in India. Okay. So then India is the right place to be, because India will be the largest market. Let us say 60-70% of Asian demand, excluding China, would be from India. So you better permit us to put up our headquarters in India. So Government of India has put up this IFSC. You can put your headquarters here. And if otherwise there is a non-resident, let us say an American company having a headquarter in India, and from that headquarter managing foreign companies. Okay. So those incomes are not supposed to be taxable in India. If you set up a portfolio management office in India, that portfolio manager is still managing non-residents portfolio, which is investment outside India. But because India has a very healthy financial system, and there are a lot of finance professionals in India, they would prefer to be in India rather than in Singapore. I have my own clients who are wizards in finance. Okay. They would not like to stay in Dubai, even if there is no tax in Dubai. I mean, because they want their kind of friend circle to be comfortably living there. They would prefer to stay in Mumbai, not in Dubai. And even in Singapore, they would not like to stay. And then there are reasons for it, which are political. So I will not go into it. So government cannot offer Mumbai to be sort of a tax-free center. So they have offered Gift City as a tax-free center. And this finance bill proposes several provisions so that if a non-resident working, meaning a company, etc., working from Gift City, and his income is otherwise also foreign income, then just because he is working from India, he will not be treated as subject to Indian taxation. That is the whole purpose of providing this relief. On COVID, sir has explained. So a COVID patient getting money from the employer, or a person who has died and his family getting money from the employer, there is no upper limit. So whatever is your expenditure, your spent expenditure, that is the only limit. You might have spent 15 lakhs, 20 lakhs, but the government says we will not tax you under Section 56. And in case of death, in case of compensation available from persons other than employer, there is an upper limit of 10 lakhs, I think, which is a fair provision. But Narendra Kumarji, I would like to draw your attention to one issue. You know, I myself know of so many people, you know, when in March 2020, this COVID virus became a very widespread virus, lot of kind-hearted people started helping COVID patients. Okay. And when the second wave hit all of India, in fact, even more people came out. I know people who are from villages, people who have no knowledge of accounts and income tax. That kind of people, they collected money from their friend circle and then they spent it on the COVID patients. These are intermediaries. These are not the people who were themselves suffering from COVID. Okay. But they collected money and spent for the COVID patients. Now the COVID patient is granted an exemption. This intermediary is not a charitable trust. He or she is not a registered charitable trust. He is just out of his good intentions collected the money. These intermediaries are not given tax exemption. And some of them are suffering. It is not the fault of the department because department has to act as per law. If somebody collected the money and he had no charitable trust, then he is subject to tax under Section 56. Even otherwise, there may be taxation. But if that person has spent the whole amount in providing relief to COVID patients, then the expenditure also should be allowed as a deduction against the donations collected. Then it would be fair. This is my a proposal to you, sir. Sir, you are muted. Narendra Kumarji, if you can unmute yourself. Yes, sir.
Yeah, no, what I was saying is a good proposal, but it has to be addressed to CBDT actually, because
Yes.
maybe they can issue some instruction. And second, how to formalize it. So then while making the proposal, you can see to it that what type of people will actually get it and how do we differentiate.
Formalization is very simple. If somebody gets money of say more than 2.5 lakh rupees, okay, he will be subject to audit. He should prove that whatever donation has been collected has been utilized for the right purpose. And then if there is a surplus will be taxable, but expenditure incurred will not be taxable. That kind of proposal can be brought in. And you being a very high senior authority, if you put in a proposal to CBDT, probably the acceptability will be better.
I would suggest, yes, being CC Mumbai, yes, definitely you can discuss with the principal CC in the meeting, and let go because there is nothing harm in it.
Yeah, we'll think on those lines.
Yes, that's all.
Yeah.
Organizers, please. Now it is 6:53.
I'll get back to you.
Definitely, we will definitely.
Thank you, sir. Thank
Definitely.
you.
Now, organizers, please, will you show your faces? Yes, I think Agarwal is there. Then
Request members to please
yes,
put their
Sheetal is
pens.
there. Kishore Mehta is there. So now I think both the speakers now will tell you what is going to happen. This happens in always whenever the speaker comes to NADT. What they speak, even when the probationers do not like, one of the probationer will get up and say, "Fantastic, sir, आज से पहला इतना बढ़िया भाषण किसी ने दिया नहीं, आप हमारे ज्ञान चक्षु खोल दिए," वगैरह वगैरह सारी बातें कहते हैं। फिर वो चला जाता है जब स्पीकर, then those probationers, because they are new, बिल्कुल रॉ होते हैं ना, कि सर ये हमसे आप क्यों कहलवाते हैं, we did not like it. So we have to tell him कि भैया तुम्हें जो तनख्वाह मिल रही है यहाँ पर NADT में, उसका एक हिस्सा इसकी वजह से है। तो ये जो दोनों ऑर्गेनाइजर्स हैं, इनकी मजबूरी है कि किसी को कहेंगे कि हम लोगों की तारीफ करें, तो भैया वो एक जो रिचुअल है वो आप पूरा कर लीजिए, फिर अपन मीटिंग खत्म कर देंगे, ठीक है?
सर ऐसा कुछ नहीं है, एक्चुअल में आपने अच्छा समझाया है। So thank you, sir, for taking out time from your busy schedule to grace this meeting and share the wealth of your knowledge. And it was really wonderful. You made this session very friendly and interactive. So now I request our immediate past convener, C.A. Nikunj Bhagadia, to present formal vote of thanks to our today's speakers.
Thank you, Ritu Madam. Thank you so much, Honorable CCIT Narendra sir, Rajendra ji, ex-ITAT member, Rashmin Sanghvi sir, and a special thanks to RC Sharma sir, ex-member ITAT, for making out time, sharing your valuable thoughts and immense knowledge with us. और जैसे कि राजेंद्र सर ने कहा, सर आप 15 मिनट या आधे घंटे बाद भी हमसे ये बुलवाएंगे, तो मैं यही कहूंगा कि सर बहुत अच्छा सेशन था. And the highlight of the session was जो point to point analysis हुआ सारे sections का, जिनका due to paucity of time जितने भी sections का analysis हुआ, in depth हुआ, I'm sure सारे members को बहुत अच्छी clarity मिली इससे, and ये बहुत useful रहने वाला है, इसमें कोई शक नहीं है सर. ऊपर से ये लाइट हार्टेड तरीके से जिस तरह से ये पूरा सेशन हुआ है सर, तो डेफिनेटली सर ने बहुत इसका आनंद लिया. थैंक यू सो मच नरेंद्र सर, फिर से राजेंद्र जी, लक्ष्मण सर, and RC Sharma sir, and all the members, and especially team for arranging such a session. And we are looking forward to more sessions from these esteemed dignitaries with their immense knowledge.
This time we'll be having physical session.
तो राजेंद्र सर जो बोल रहे थे, इसके लिए अलग एक दिन चर्चा रखनी है, उस दिन हमें भी आप शामिल कर लीजिएगा मैडम. थैंक यू सो मच सर, थैंक यू वेरी मच. थैंक यू भरत जी, for playing a very important role in
arranging this session.
making us fortunate enough to hear these dignitaries. Thank you, sir. Thank you. Over to you, Ritu madam.
Thank you so much, Nikunj bhai. Thank you, Rajendra sir. इस बार क्लासरूम में ही होगी अगली मीटिंग, और कोई बाहर नहीं जा सकता। 2 घंटे से पहले बाहर से लॉक लगवा दूंगी मैं।
नहीं, I like because मैंने कहा ना, once trainer always a trainer, and it gives you एकदम, जब आप बच्चों को सामने देखते हैं, it is something like you call KT, knowledge transfer. Because at this age now, whatever we have got, we want to transfer it to next generation. Basic motto for us. Myself or even CC sir or Mr. Rashmin Sanghvi, we in that age group, we want to. So whenever you call, we are ready.
Yes, sir.
Again, language is a no barrier for me. Yes.
Thank you so much, sir, making us so comfortable in inviting you next time. And thank you for knowledge sharing. Thank you, CC sir, Rashmin sir, and Bharat bhai, Sheetal Sharma, Deputy Convenor, Kishore Mehta, and the entire team. And thanks, member, for making this session resounding success. Thank you so much, everyone. Thank you.
Thank you, everybody, and all the best.
Thank you, sir. Yes.
Thank you, sir.